Why is Apple's PE ratio so low, and what that can mean for investors? In this video, I'll answer 4 important questions as it relates to Apple's PE ratio and how that understanding helps me clarify my buy, sell, hold decisions regarding Apple shares. Welcome to the Money Growth Academy. My name is Dee, and before we get started, smash that like button and subscribe so you can keep up with the latest in financial news, important stock analysis, as well as gain insight to ways to grow your money snowball through the proper mindset, entrepreneurship, and investing. Here are the 4 questions that help me better understand Apple's PE ratio. Number 1, what is a PE ratio? And number 2, how does Apple's PE ratio compare? Number 3, why is Apple's PE ratio so low? And number 4, what does that mean for Apple investors? Now, number 1, what is a PE ratio? There are a variety of complicated definitions you can use for PE ratio. For me, I prefer a simpler one instead. In my view, PE ratio indicates how much people are willing to pay per future dollar the company earns. So in other words, if Apple's PE ratio is 36, which it is presently, then it presumably tells me that investors are willing to pay $36 for every future dollar Apple earns. PE ratio doesn't guide all my decisions, but it is the canary in the coal mine for me, especially in this overheated and overbought equities market right now. It gives me an indication of whether it may be, maybe good to buy or good to sell or good to hold. I've owned Tesla for some time now, at least the shares. I started buying back in May 2016 and continued throughout. And during the time, I was actually buying it during the same time that Tesla Qs were artificially pushing the price per share down through short selling, but not before the short sellers. They first started selling, mostly overblown bad news to the financial media to push the price of the stock down and get people sour on the stock. Just last week, I sold only 120 shares of my Tesla for a 100K gain. Now, I don't share that with you to brag. I share that information with you in order to demonstrate how I use PE ratio in my decision to buy, sell, or hold, and I sold several shares in this case. I've been watching Tesla's PE ratio for quite a while and noticed, last week it was at 1,676. That let me know it was time to take some profits off the table to set aside for other potential equity investments I might be interested in, but still waiting for them to go on sale. The reality is, as exuberant as we all may get from time to time about this bull market, nothing goes up forever. One of my rules is not to ever try to time the market. No one knows for sure how long the market will go up or how long the market will stay down, especially in this equity-dense market we've seen in the last several years. I've done well by sticking to some basic investment principles, and one of those is time in market beats timing in the market. Number 2, how does Apple's PE ratio compare to other companies? When you understand this, you begin to get a sense of how underappreciated Apple is by the market. Apple had over $274 billion in revenue in 2020 and operating income of $66 billion. In Q4, that was just announced January 26, Apple achieved an all-time revenue record of $111 billion and had double-digit growth across every product category. They also ended the quarter with almost $196 billion in cash. And its PE ratio is 36. I said this before, Apple has multiple product lines that if you were able to break them into separate companies, some of them would each make the top 250 on the Forbes 500 list. Let's compare Apple's PE ratio to some of the other companies you might be familiar with. Dell Technologies, not near the technology giant Apple is, has a PE ratio of 24.47 with only $34 billion in revenues and operating income of $4 billion. Microsoft has a PE ratio of 35.75 with 2020 revenues of $143 billion and $53 billion in operating income. Netflix has a PE ratio of 88.73 with 2020 revenues of $6.64 billion and operating income of $1 billion. And it only distributes content and makes movies. Amazon has a PE ratio of 99.36 on revenues of $386 billion and operating income of $22.8 billion. Now, Tesla, the big daddy of PE ratio of all of them, has a PE ratio of 1,676, which means that people presumably are willing to pay $1,676 for every dollar of revenue Tesla has not yet earned. Tesla had 2020 revenues of $31.5 billion and operating income of $721 million, mainly supported by an increase in deliveries, padded with revenue from regulatory credits. Look, I get it. I own Tesla stock. I love the company. I hope Elon wins and convinces other car manufacturers that EVs can be made affordably, profitably, and attractively. But there's a limit to my insanity.
Here's Johnny.
Number 3, why is Apple's PE ratio so low? 2 major reasons. Apple doesn't play the race to quarterly forecasts. They stay focused on their mission, and that upsets Wall Street. So the stock is shorted by Wall Street hedge fund all the time. I talk at length about this in our recent video, GameStop Stock Short Explained. Make sure you go back and watch that. The number 2 reason, well, Wall Street considers Apple a home electronics company with trendy products that fade. In essence, they are very highly misunderstood by Wall Street. And number 4 reason, what does Apple's low PE ratio mean for investors? In my opinion, it means good news. And my hope is that we can expect more of the same in the future. What I mean by that is I've invested $22,000 in Apple over the course of the last 6 years, which has now grown to a current value just over $112,000. Now, and I don't know about you, but I think I'll take a 400% profit over 6 years anytime. As long as Apple stays committed to 3 core values. Number 1, maintaining a culture of innovation. Number 2, maintaining an active install base of over 1 billion. And number 3, a commitment to high levels of customer satisfaction to create product loyalty to reinforce and grow the active install base. Should you buy Apple shares or add to your current positions? Well, I can't answer that question for you. What I can wonder is whether or not Apple shares might just be the lowest they'll ever be again. Thanks for watching. See you next time.